Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 12th. It's my day that I do my webinar, but no, we're not doing the webinar right now. We're going to do the daily market commentary where I talk about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. And I'm going to go a little bit further for you all folks out there and talk about these option strategies I'm trading on any given day, based on some guidelines that I've come up with over my 25 years of experience to streamline your process and finding the right strategy for your given assumption. We aren't here at Pro Trader Strategies just picking option strategies out of the hat. What we've done here is figured out the environment, figured out the right strike locations for you for any given strategy. That way, you have a neutral assumption, you have a bullish assumption, you have a bearish assumption. Whatever that assumption is, we'll find the right strategy following these roadmaps to trading options, because it will lead us down the path to finding that strategy that is most appropriate for everything that's going on around that underlying. All right, so without further ado, let's get on with the economic data. Across the pond, we got some preliminary GDP numbers coming out of Great Britain, and they came in at 15.5, pretty much in line with expectations. It was expected to be 15.8, so slightly lower there. They did revise last month's number up almost a full percentage point as well. Construction output out of Great Britain coming in at 2.9%, better than the expected 2.1%, and again, another revision to the upside from 3% to 3.8%. Industrial production out of Great Britain coming in at 0.5%, expected to be 0.9, so a little bit lower there. Last month's number remaining unchanged. Manufacturing production coming in at 0.2%, expected to be 0.7, following suit with the overall production numbers, although this one was revised up slightly on last month's economic data point there. Now, let's talk about the United States. We got some CPI numbers, consumer price index coming in at unchanged, expected to be 0.1%. So a little bit lower, which I'm not going to hate on, to be honest, because I'd like to see lower prices. That allows us to spend money elsewhere. I don't want to see inflation right now. Also, we got the core consumer price index. Again, remember, stripping out food and energy because those are a little bit more volatile. And they came in at unchanged, expected to be a build of or an increase of 0.2%, which is a little bit surprising because during that time we did see crude oil make a little bit of move to the upside. All right, weekly unemployment claims coming in at 709,000, expected to be 730,000. Remember, if people aren't claiming for unemployment, it seems like they're hired, right? Well, that's not necessarily always the case with this number, but it is good to see it's coming off a little bit. And the reason why I'm not too concerned about this is usually when we see that unemployment claims come off a little bit, it means that some discouraged workers, people falling off the quote-unquote statistical number there. But what we have seen in the non-farm payroll number is that participation rate is staying relatively elevated, so that is a good thing. Crude oil inventories. What's it doing? What's crude oil? It's up on the day. Well, that's because it should be bucking the trend. It showed a build of 4.3 million barrels, expected to be a drawdown of 2 million barrels, so 6 million barrel build over what was expected. Now, remember, we saw the drawdown last month of 8 million barrels, making this market want to move to the upside. Well, today, we've got a major build here. We did see some drawdowns in gasoline and other distillates on that front. So although we're seeing a build here in inventories on crude oil, we were seeing some drawdowns on the backside there. Now, some of this could be because of production shutdowns with hurricanes in the Gulf as well, where those manufacturing facilities of crude oil, the distilling process, shut down. Well, what does that mean? That those inventories start building and the distillates aren't being replenished, so they're going down as well. So we'll have to dig into those details a little bit later on, but that number just pretty much came out. And we have a couple of ECB President Lagarde speaking, and a couple of our Fed governors are speaking today as well, such as at least Powell. All right, so crude oil, we mentioned, moving higher despite the fact that we saw that pretty major build there in the markets. We've got gold futures here on the day making a bit of a move higher. Gold futures don't look that great right now, but earlier today we were looking like a continuation here. We could see, why is this NASDAQ? Probably part of my problem here. Gold futures making a bit of a bottom here at that area that I talked about, you know, coming down to 1850, I felt was going to act as a nice support. Despite the fact that we don't have a Fibonacci there, well, it lines up with the bottom end of this volume node of a value area we're creating here in gold futures. An acceptance of value higher is usually bullish for underlyings like this. We found that support. Looks like we're getting a bit of a bounce. If this market starts making any type of correction at all, I put on a trade for gold. I'm going to be looking to get out of this if we start breaking below our area right here at 1850. Okay, so that is my line in the sand where I'm going to be looking to get out of my GLD trade that I'll talk about here in a moment. So keep your eyes out for that. Line in the sand if you are a gold bug or bullish in gold. And well, I guess we're just going to miss over all of my other trades. We got bonds moving higher again. You know, yesterday, remember I put on that long TLT trade. I felt like this was overdone to the downside, due for a bit of a bounce. Start making some correction here, maybe at least test this 177 area. So that's starting to shake out. Obviously, we need this to stay higher for that correction. Hopefully, Powell doesn't throw that out the window. All right, so NASDAQ, again, you know, I'm still under this camp. We've made these couple of moves here. I do believe that we're going to build like another shoulder here in this market. And so that means a little bit more pain to the downside. I think that the whole reopening trade is a little bit ahead of ourselves. And, you know, I've been covering Coca-Cola when we got that bounce on the reopening trade. I'm holding on to some of those trades that are the stay-at-home trade. I think we're going to start seeing some more lockdowns here in the United States. We're not going to see that vaccine until basically summertime or at least spring. So I do think that we're going to see some more pain in the markets before we start resuming to the upside. VIX, well, we're kind of over this. It's a little bit higher on the day, but we've got the Dow Jones Industrial Average off by about 122 points on the day. Again, making that market setup like I've been talking about, a little bit more of a correction, at least come back down and test the points of control here in the Dow Jones. No, I do not expect the NASDAQ to see those moves to their points of control. But E-mini S&Ps, Dow Jones, definitely a possibility. And maybe even just come down to this 3,400 in the E-mini S&Ps. We're bumping up against this area of resistance. That is the last high we've seen. Now remember, overnight we did see this spike to 36.68, right? Now there's a couple of, you know, ideas here that we got to really hash out, and that is that high was created overnight. The day session is going to have that as a target for itself. It's going to want to go up there and print that during the day session. But is that going to happen right now? That doesn't necessarily mean that's the case. I think that we might see a little bit of a correction. This is a little bit more healthy as well. A little bit of a correction may come down and test that 3,400 area and then resume for that target, okay? Because right now I think a lot of people are saying it's got to print that target. It's going to go for it. And people are going to get a little bit ahead of themselves, and the market is going to try and create a little bit of pain for those people. So I do think that we might see a little bit of correction here in the equities. And that would also follow suit with, I think that gold is going to go higher. I think that bonds are going to go a little bit higher here as well. I think gold's going to go higher, you guys. Why? Because I think that we're going to get another round of stimulus. Is it right away? No, but it's going to be within the time frame that I set up for my trade. So we'll talk about that here in a moment as well. What's going on here? I mean, literally, look how tight these markets are. We haven't seen these tight of markets for a long time, and you know, we're still having some pretty good swings within these small little ranges. But at the end of the day, trending a little bit sideways. Is anything going to happen really here today? It's really going to be the talking heads that kind of spin this action, and Powell speaking right about now is going to be something that could start influencing these markets as well. All right, gold futures. I'm working on trying to get a trade in here. Market has continued to rally. I'm looking for this type of pullback where we get a little bit of a pullback sometime today. As you could see in gold futures, they were moving higher nicely, but I'm looking somewhere in the 180. I'm looking at buying the 182 calls in there. Excuse me. I'm trying to buy some 182 calls, maybe some 183 calls. But right now I've got the 182 calls working, so I'm a little bit below where the market is. I'm right around $3.95 for those. I tried to get in earlier this morning, but the market just started moving to the upside. Looking for a little bit of a pullback here, and I'll try and get into those as a long as well. So playing that to the upside. That's the only trade that I've got working right now. We did talk about the TLT trade, so I might as well go and look at how TLT is trading, and you can see it that it's gotten a little bit of a bump today off those lows that we saw yesterday. Again, a break below this area right here is looking to where I'll pull the ripcord on that trade as well. All right, so I'll let you guys know how this gold trade starts working out, but I've got a working order in there right now. I might just go out there and pull the ripcord and get this trade pretty soon. I'm kind of tired of sitting on my hands here at Pro Trader Strategies. One last thing we do have to go over is our site disclaimer. We are an educational company. We're not trying to solicit you guys to living off the cliff with us. What I'm trying to do here is help you streamline your process and finding the right strategy for your assumption. I'm not here to just cherry pick trades for you or do any of that stuff. I believe your assumption is as good as mine on any directional moves. So please take that into account, but follow these guidelines. We're talking about you come up with a bullish assumption. What's the right strategy for a bullish assumption? Is it going out there and doing long calls with 8 days to expiration? No, those aren't some of my rules. Those are absolutely on the flip side of it. I was watching TV today, or actually Twitter today. I'm watching one of my guys that I used to trade with back in the day talking about doing covered calls in like 128 days out. All right, no, don't do that. I mean, that doesn't make any sense to do your covered call strategy that far out. All right, it's just ridiculous. And anyway, that's my soapbox. I'll stick to it. But anyway, so make sure you follow these rules, you guys. I have some pretty darn solid rules that when you follow them, the light bulb will go off and you'll understand why I have so much trepidation towards what some of these other people are doing with option strategies. All right, so that's about it. Check out Pro Trader Strategies today. Sign up for that webinar we're going to be doing today as well. It is on the butterflies. We're getting into the butterflies. They have a little bit different. They're a little bit of a different beast, you guys. So if you're just willy-nilly throwing these strategies on, you need to know what you're getting yourself into, because these butterflies, they act a little bit different. They morph into something a little bit different. Pun intended. All right, if you can't take that on a miss, you can't take that, take it easy.